Happy Saturday, everyone. Welcome to the Note Show. Today we have Alden Guajardo here talking about his Silvercrest Opportunity Fund. And really, we've been talking about mailbox money and investment opportunities for people in the real estate field, especially I think we're talking about today is more passive investments. So maybe you can explain what you have in mind today.
Yeah, absolutely. For investors that may be watching here today, I think we can all understand that there's multiple buckets of investments offered to an individual. And, being on the Note Center here with Greg Dixon, I specialize in notes. I think it's a great alternative investment strategy for individuals to additionally diversify, in a market where they may have a whole lot of options, but really, what's the stability in the investment strategy and the base return, ultimately received within the performance of that asset. So being here today, president of Silvercrest Opportunity Fund, being notes centered, given the current financial market, I think it provides a great hedge. Why? Because, when you're talking about a already performing asset, there's not a whole lot of business projection to be had over like a 5-year delta, 3-year delta. It's a performing asset. I don't have to go out and create an opportunity ultimately to facilitate a build out, get permits and things of that nature. And that's tough to find, especially at a high passive return. And, there's two different areas of opportunity for investors in notes. Set aside the strategies of like non-performing and things of that nature, strictly focusing on performing assets on the note investment strategy. And I noticed as attending, these different real estate note investment conferences, we were just at Note Expo with Eddie Speed, the Alternative Asset Investment Summit, where individuals were, kind of a wider variety than just notes, but also Diversified Mortgage Expo. And it's important to see the breadth of what's offered in notes. You have commercial real estate investment notes, you have single family notes, you have other notes that are associated with the stock market. But I think a highly unique and slept on investment strategy in notes is manufactured housing. Why? Manufactured housing is hedging the market right now in the affordability crisis we're seeing currently. And from these different note investment conferences, why does that translate to individuals talking about stability and net returns? Well, in the hedge of notes and the want for a passive return in a strategy, you're either going to compromise on the net return received in that note investment strategy, or a little bit higher risk associative, to that want for a higher rate of return. Well, an individual that may be accredited here today or a high net worth individual, they're looking at these opportunities and trying to find the best educated move forward while still earning a satisfactory return. And historically in note investment strategies, on a performing note, those rates of return are 8 to 10%, depending on how you're participating in that note. Well, that's on a residential property with a qualified borrower. And we see that out at these note investment conferences of individual investors diversifying their portfolio in residential real estate notes. Why? Because they're stable. It's an asset outside the stock market. You're secured by a lien on that property. And it provides that monthly principal and interest payments to ultimately gain that financial freedom in a stable, passive, and tried and true processes. Well, the adjacents of the Warren Buffett investment strategy in manufactured home notes, I think currently sits higher on a level for possible individuals wanting to invest their dollars better, smarter, faster, and stronger. What better way to do that than in a note investment strategy, but with the adjacents and collaboration of manufactured housing and the affordable home ownership programs that are achieved within that investment strategy. So as a Silvercrest Opportunity Fund, we're not just a fund. We provide additional hedge to individuals wanting to participate at the higher than average return in a Warren Buffett investment strategy, originating notes on manufactured housing for the higher than average yield received in the paper originated here in Arizona, top 10 market. But that being said, it's cool to see the translation from residential real estate notes to manufactured home notes, and why that is an additional stable passive return out in the market, and being here as a fund today to additionally provide that security of accredited investors wanting to participate in a stable passive return of a portfolio of notes on manufactured housing for the high passive return and the low cost affordability where it fits within the nation here currently. I think it's a big item to talk about, to see from these different note investment conferences. They say the riches are in the niches at the end of the day, and to ultimately diversify in a tried and true strategy in the footsteps of a Warren Buffett investment strategy. That's an institutional strategy. That's a relatively newer item on the plate, right? For these institutions. Historically, there wasn't all that much financing on manufactured housing where, there's tried and true banks that do residential loans and things of that nature. The private secondary market has blossomed on, seller carry paper, but there's not all that many executing out in the market of seller carry paper on personal property manufactured homes. Why? Because, it's definitely a misunderstood asset class, and there's not all that much education or knowledge behind why it's an opportunity for institutional investors and accredited investors that may be watching here today. Clayton Cavco and 21st Mortgage are all owned by Warren Buffett. Well, you just heard Warren Buffett went to cash the other day. I'm sure Greg's been following that a little bit, being a stock market individual, reading more into that than I may be. But he went to cash and sold a tremendous amount of bank positions and things of that nature. Well, you know what he didn't sell? His ownerships in Clayton, Cavco, and 21st Mortgage. That's extremely important to understand. As I talk to accredited investors and high net worth individuals, that look at me as the young gun on the block. I'm 30 years old, sitting here today, 7 years in business, 250 manufactured homes bought, rehab, resold, 150 seller carry finance transactions. But to see that additional other players are actually hedging their bets long term in an asset class like this is truly a time in itself. It's highly unique and never been done before by other institutions. The appetite in mobile home parks itself has been abundant over the past couple of years, and with historical representations of the less than satisfactory investment grade of that asset class. It's a new day and age here, and with the individuals that have capital on the side and they're looking at these different funds and available opportunities of notes. You got commercial real estate investment syndications, you got multifamily syndications. It's tough to ultimately make a decision on where to go with your capital. And, I would never tell an individual to put their last egg in, in a high risk or, all of their money into one asset class. You need to additionally diversify and have that balanced portfolio. Any wealth management company is going to tell you that. Any financial advisor is probably going to push that same modus operandi of having high risk, low risk, some bonds, and some, blue chip stocks and some real estate holdings. I think notes and a fund may fit for someone currently watching here today. Why? Because, that's the stability and passive financial freedom achieved with acquisitions in this asset class. And the stability translates from a longtime institutional investor following in the footsteps of Warren Buffett. The stability is provided from the security of the asset. So we have a lien on that home with a qualified borrower that fit a specific criteria of 600 plus credit score, no past criminal, no open bankruptcies, no past evictions, and verifiable income. And the desirability of that product is entirely contingent on the area well, we're here in Arizona originating notes on manufactured housing in a top 10 market, with high population growth, highly dense, desirable areas with a lack of quality, affordable solutions in housing here in the Valley. And we've seen that the local state representatives have, kind of tipped their hat towards the issue of, the affordability crisis and the lack of quality, affordable solutions here in the Valley by allowing alternative dwelling units. But that can only solve so many issues here in the Valley. Well, what does that translate to? That translates to low-cost manufactured housing here in the Valley. And for, I think, the accredited investor that is wanting to diversify in a stable passive return that's already performing, there's no build-out structure needed. This is a performing asset with a qualified borrower, and opposed to buying one note or buying 10 notes, depending on if you have $1 million to $100,000 and you're watching here today. I think the fund may fit for individuals watching. Why? Because it provides a satisfactory return, and it provides that additional hedge with a qualified vested partner with vested interest in those notes, me, Alden Guajardo, Silvercrest Opportunity Fund, and our licensed dealership of manufactured housing here in the Valley. Like I said, we're not just a fund. We execute and started as a licensed dealer, buying and selling for cash, started originating notes on manufactured housing, gained some further latitude, and I'm sitting here today with the fund to offer individuals that passive, stable return out in the market. And it's important to understand why that's so stable with a qualified partner within that program, diversifying into the fund, as it's not just a back end finance fund component where the full boots on the ground, offering full servicing of that note from A to Z. So sitting here today with Greg Dixon on the Note Center, wanted to offer this opportunity for accredited investors. Currently, we are offering a 1-year term, $50,000 minimum for 10% net paid monthly to the investor. That's a 1-year term. 1 year into people that may be watching here today, how can I do that? Well, I could sell the note at that time, additionally raise capital, and the face rate of that note is 14%. So it's a performing asset with a face rate of 14%, and I am pledging, a per unit basis of investment from an accredited investor at a $50,000 minimum. Additionally, we have a 3-year term at a 12% net paid quarterly for individuals wanting to additionally diversify across multiple doors in a market where they can earn with all the benefit of earning in real estate without owning any real estate. There's no taxes, no insurance, maintenance, or management fees tracked into the note. The management fees are built in on top of the net return provided to the investor. So that's, a tried and true strategy. Sitting here with you may have capital sitting on the side and you're looking at commercial investment strategies. You're looking at trying to buy an SFR. Residential pricing is highly pressurized right now. We just saw rates drop 0.25%. There's still some demand, but pricing's kind of stabilizing, I think, is in certain areas. Here in Arizona, it's still a hot market for individuals still moving, but we're not seeing a whole bunch of appreciation. But that being said, why does that translate to the fund? Well, there's a whole lot of less sweat equity involved. You have tax deferred strategies where you can direct your IRA or your solo 401k into an investment strategy like this outside the stock market and take your gains. Listen, the stock market just had a huge bump over the past couple of days in reaction to the election and Donald Trump winning the presidency. And, you don't want to fully liquefy that portfolio, but take some gains. Take some gains. Where do you go with those dollars out in the market? If you're not a savvy individual with the business background and acumen to do, some fix and flips or, a single family rental, you see the average net returns of a long-term rental strategy of like 5%, which is speculative with some vacancy rates, and the net appreciation nationwide is about 3 to 5%, and you're not wanting to take that super big risk on owning one asset. I think that fits for an investor to invest in a fund here today to earn a higher than average return, as well as the emotional satisfaction of creating homeowners. And I think Greg can agree, having a note investment strategy behind the investment in the fund. What's your take on that, Greg?
Yeah, well, I want to say I really appreciate what you're doing at Wind Mobile for helping with the affordability issue and the housing supply issue. So,
Absolutely.
so it's really, you're solving a problem that's not just in Arizona. It's all North America wide, really. Yeah, we have that in Canada here too, and the investment fund here, like the diversification, like I deal with a bunch of cryptocurrencies and they're really fickle. So it's nice to have a pretty solid return with 10% that you get with a safe investment and a diversified investment. So really, what you're offering is tremendous.
And I appreciate you even bringing up like the crypto market. Bitcoin's booming right now. I talk to a lot of people that are investing in Bitcoin because of the big run that it's having right now. But listen, that translates to volatility at the end of the day, and that could end up fluctuating. You want to take some gains, at the end of the day, still leave some in, for the potential of more increase. I think Bitcoin super valid, given Donald Trump entering into the presidency. He's, the crypto president, as they say. But, to have a safe and stable avenue to participate with a satisfactory return that's a double-digit return, those are tough to find out in the market. That's not a 5-year projection of a multifamily reestablishment, fixing some deferred maintenance and projecting a return. These are already performing assets, and I think that's tough to find, especially in a double-digit return on a, even it being, as niche as it is. There's not that many opportunities available in the nation. And we talked to a few other people, shout out to Dr. Ivan and a couple other people in manufactured housing that are pioneering this industry. Even just being here on the show, Greg, I've had a couple people reach out to, hey, we actually operate this strategy in a different market and it's flourishing. We need help bringing further capital to the table to ultimately execute on these tried and true stable strategies. That's a nationwide, dependent on the market, but with high population and high density environments in investor-friendly states. I try to stay away from like the California conversation, but like the Florida environment, which has a small tinge because of the natural disasters. But there's other markets. My point being that we could additionally capitalize on in this strategy. Affordability and the crisis of affordable housing is going nowhere. And that translates from high labor and material costs, as well as, the new institutional appetite into single family properties. BlackRock, Vanguard, and State Street trying to own 30% of residential properties in the nation by 2030. And they may already own 30% of, they may already own that for all we know with their subsidiary entities. But, it's tough to find. And I think for a high net worth individual that may be watching here today, we're looking for savvy investors that want to help additionally capitalize and give back, not only earn a higher than average return, but help solve this crisis for new families and retirees that are wanting home ownership, but have been left out of the conversation because of, the institutions and because of how COVID hit individuals so hard, small businesses, new families, and even the the facilitation of building of new inventory out in the market. It's tough to navigate. And as you sit back and evaluate these situations, you see long-term multifamily plays having a challenge because of the fluctuating interest rates. on commercial real estate investment strategies, which creates some concern. I talked to a lot of our investors that have invested in funds, to establish multifamily properties, and they're having trouble even getting their capital back. Well, with the fund in notes, that's not an issue. We've built a full back office program to sell notes at mobilemailboxmoney.com, and have built up over 50 frequent investor contact lists that buy our notes. And that's why we've started the fund. We've had other individuals start funds to buy these notes, because they see the opportunity for liquidity, whether raising on a 1 to 3 or 5 year term, offering an investor a 10-12% return, what's the viability of an investor getting their capital back within that time frame? Well, I can say with almost utmost certainty that those notes will trade on the secondary market with our already facilitated sales platform, mobilemailboxmoney.com. So it's a tried and true strategy. And, I've been on the note show here with Greg before. I think I talked for an hour last time myself, and I'm not going to do that to Greg here today. But that being said, this provides true stability and ultimately real liquidity at time of commitment. In a year from now, let's say if I don't end up raising, $5-10 million, and individuals want a liquidity moment, we'll just sell that note to our secondary market and, let that investor take his capital into another opportunity that he may see fit, or, buy his daughter a house for college, or, whatever. That's all real opportunities with double-digit returns and true stability in a Warren Buffett investment strategy. It's hard to find in a performing asset.
No, that's fabulous. And as you mentioned, you're in Arizona, but you've also been talking with other people who have been talking on our roundtable discussions here in Florida, Georgia, Arkansas, other places. So absolutely. I think you've been in conversations about some deals with some of the other people in the group.
Yeah, Dr. Ivan, and I forget his partner. Diego, yes. Yeah. Great contacts. I got my dog barking and coughing in the background here, but great contacts out in the market. It's important to understand that there's a larger than perceived opportunity here to execute out in the market, and there's a need, so I'm looking for family office contacts. I'm looking to connect with other banking relationships. I think that, there's a new frontier here, and I say like banking relationships because these are bank quality notes. These are notes that banks are actually looking into diversifying their portfolio. I'll name drop Grand Bank here in the Valley. They've asked about me a few times. If you have contacts at Grand Bank, would love to talk to them again. But there's another individual operating here in the Valley that garnished favor from a bank that's buying these notes, because they see the stable passive return. And I've been I talked to quite a few individuals of the availability to escalate the velocity of this business by entering into another market with Diego or Dr. Ivan, or other individuals that may be qualified operating in other markets. There's a real opportunity, and with my relationships with the institutions that own these parks, they own national portfolios. Like CalAmp Properties, Kingsley Management are just two of the few. Treehouse. There's Roots Management. I know all of their corporate individuals operating, and we've been invited to go out to these markets, and it's a challenge for us to additionally navigate another market unless we had a vested partner and more capital to the table. And that's why we're sitting here today. I'm on a big raise. I'm trying to raise $10 million, $1 million in the next 30 days. And, that will translate and help us acquire my notes that I have created. I know the borrower, we qualified the individual and put a bow on that note to hold in Silvercrest. And hopefully, as we gain further traction in our local market, we'll start garnishing favor from these banks and family offices and private capital, and be able to bridge that gap and become almost maybe even, another 5 market brand name to execute in this highly needed product, this financing of manufactured housing. I think and appreciate being here today, Greg, as more capital comes in, and that will allow us to additionally execute out in the market a tried and true business processes. We don't have to go around and run analytics of where to put these dollars. We have the business churning ready for your capital today to execute in a stable, passive environment and help grow and create that many more homeowners in a time when it's needed most. What are you doing to create a better and more satisfying opportunity in the nation for hardworking Americans? And I think it's time for a change in the market. We all are trying to make money at the end of the day, but what better way to do it than in emotionally satisfying and helping out highly needed individuals, that are qualified and have been left out of the conversation. We're all here to make a profit, but listen, to say that you create homeowners in your strategy and it's stable, passive, it's tough to come by. So I called people here today. Visit silvercrestopportunityfund.com. If you are an accredited investor, I'm president of Silvercrest Opportunity Fund, 506c3c1, and I am able to market available to you watching here live today. If you're looking to make an educated decision and a profitable return on investment in an emotionally satisfying vehicle, that's silvercrestopportunityfund.com. Win Mobile Homes and Mobile Mailbox Money are the providers of those assets. We bought, sold, rehab 250 homes here in the Valley, 150 seller carry finance transactions, currently offering a 1 year term, one year term, paid monthly, 10% net to the investor, or 3 years at 12% net paid quarterly to accredited investors. And I'm happy to be here today, Greg. Appreciate the opportunity. Hopefully, within the next 30 to 60 days, we'll have another conversation of the new notes that we've taken down within our portfolio. Had our first capital investment last week from a current investor of ours that is accredited, and we took down our first two notes within the fund. That's not anything to discount the stability of the fund. These notes have been growing for the past 7 years. So again, Greg, appreciate having me here today.
No, thank you very much. No, this is a terrific opportunity for somebody who wants to get into the space, and you can start with as low as $50,000, I think.
$50,000 minimum. We have availability to maximize that delta, $1 million at a time.
And no toilets, tenants, termites, or trees.
Listen, that may go over some people's heads here and there at any given time, but there's true financial passive freedom achieved in note investing and altering your strategy, not changing, altering your long-term real estate investment strategy outside of owning and learning to be the bank on a note investment strategy.
Yeah. I can't help but explain the trees thing. And had somebody on the show one day who had a rental property. He said, "I got to go. A tree just fell on one of my houses."
Yeah.
So you don't have that issue with a note.
You don't. And, you have mandatory insurance policies required by the borrower, that are hedging against any natural disaster type of opportunities. We invest here in Arizona. In Florida, that may be a challenge here or there, depending on what market you're in that specific area. But yeah, man, the proof of the creation of financial freedom without the headaches of getting calls from your management company and getting calls about trees falling on your homes, that's all fun and games until it becomes a actual thing that's happened to you sitting here today watching. That's a tough thing to try and mitigate, at the end of the day, and things happen. But to be able to invest in a fund with a qualified operator in a note investment strategy, you're already hedged with the note. right? But also with a qualified operator with tried and true processes, a team of 15 in rehab. We have about 10 sales agents. We have 5 in management. So it's a real deal back office team working here today to provide you the best passive, stable return, and also for us to get the emotional satisfaction of creating homeowners outside of trees falling on houses.
Yeah. So get your money working for you and help people get into homes. It's a win-win situation all around, really.
Yeah. So Greg, I'm going to sign off here shortly.
Okay.
I hate to rant too much on your channel. It happens here and there. Go back and view Greg's other videos of note investors talking about partials. Shout out to Larry Hoffman, Diego, and Dr. Ivan, the note doctor, and the myriad of other individuals participating in this open table over the past 6 months, maybe longer. You've been doing it. I encourage individuals go back, check those out. Explore the available opportunities so you can make the best educated decision for what fits for your portfolio at the end of the day.
Well, thank you very much for that shout out, and thank you for coming on the show today. And we'll talk soon.
Absolutely, thanks, Greg. Bam, bam, bam.
Bam, bam, bam. There we go.
Have a great day.